Let's talk money.
Welcome back. Here with us on Let's Talk Money, and this time we are simplifying, trying to decode what these mutual fund stress tests really mean and whether you need to do anything different with respect to your mid-cap and small-cap funds. So we have a question coming in from Deepak. Let's see what Deepak wants to know. Deepak is saying that he has significant exposure in the HDFC Midcap Opportunities Fund and is asking what the stress test results signify for this particular fund. Okay, so the fund in question is the HDFC Midcap Opportunities. I'll quickly, talk about the data points that we now have for this fund. Well, let's start with the basics. The fund size, it's a large size fund, over 60,100 crores of assets under management. What have the stress tests revealed? The stress tests tell us that it will take 23 days to liquidate 50% of this fund's portfolio and 12 days to liquidate 25% of the portfolio. Now, the additional data points also tell us about client concentration or investor concentration. So, if you look at the top 10 investors of HDFC Midcap Fund, how much of the fund do they actually hold? Well, they hold about 1.4% of the total fund size. And then we have what is another critical disclosure that's coming through, which is the market cap mix. This is a mid-cap fund, but does it hold all mid-caps or some mid-caps, large caps, etc.? So, it's in front of you. The mid-cap share is about 66%. The large-cap share in this fund is about 13%. The small-cap share is about 14.5%, and it's sitting on about 7% cash. So we have all this data. But gentlemen, data is one thing. Interpreting the data and making sense of it is another. So Feroze, let me toss it to you. Now, we have all this new data that as an investor, I'm aware of. How should I make sense of it for the HDFC Midcap Fund?
Yes, so I think if you look at the data points which are newly there, I think those data points don't show anything alarming. So Deepak does not have to take action on this fund on the new data points which have emerged, point one. If you look at 23 days and 12 days, in isolation, they will not be such meaningful numbers. If you look at it relatively of how that fares with the rest of them, it'll become a more meaningful number. Any number gets meaning with the context you draw up around it. Having said which, so I think 23 and 12 days is something which I think is very, very good for a 61,000 crore, 60,000 plus odd crore and the largest mid-cap scheme. Second, I think the liquidity has also been kept in mind. Chirag Setalwad is a great fund manager, a fund which has been created in 20 years, practically, if I remember right, has the top 10 holders of the fund have 1.4% of 60,000 crores, which is about 700-800 crores. So the top 10 investors of the fund have 80 crore rupees as one specific individual or a corporate. So that's not too much of a concentration. That's because of the nature of the fund's existence of long periods of time. So Deepak, nothing to worry. If you look at the data with respect to liquidation is great in terms of liquidity risk being low, point one. Point two, from a liquidity perspective, having 12% in large cap is a great prudent strategy. In spite of that, beating benchmarks over long periods of time where mid caps outperform large caps, especially in the broader market rally we have seen, Chirag has been able to outperform by still having 12-13% in large caps. So that's great. Third, I think the fund size is great. There's not too much concentration across top 10 investors. Those 10 guys can decide to liquidate and 10,000 crore goes away. It is just 800 crores in the top 10 investors. So I would say nothing to worry. Great data, better than I would expect the largest fund to throw up.
Okay, awesome. And see, this reminds me, viewers, please remember, see, when we spoke about this fund, how I didn't start with 1-year return, 3-year return, and 5-year return. I started with a lot of the other data points that we typically don't consider. And Mohit, I think that's the whole point of this exercise, to get people to think more laterally than just be return oriented. So HDFC Midcap Opportunities, what's your take?
Look, I think 60,000 odd crores, it's the largest fund in the mid-cap segment, controls 20% of the AUM of the entire segment, right? So Chirag Setalwad managing that size is a phenomenal job. And the way he has conducted the fund, absolutely no red flags in the data. I think you've rightly pointed out the lens of judging has kind of changed. The needle has moved towards risk parameters and other parameters. If you see at the turnover ratio, it's 19%, right? So for a mid-cap fund of that size, shows the kind of conviction a fund manager is running. The turnover ratio is fairly low. You look at the P ratio, right? And all those matrices are now published. The P ratio of the fund is lower than the benchmark P ratio, which is again a great sign. Running a fund of that size and not overshooting on the valuations or on the kind of stocks, the stock picking ability of the fund manager, it speaks volumes about that, right? And obviously the breakup of market cap, which is again fantastic, 65%, which is mandatory in mid cap, small portion in a small cap, which can give him the desired alpha. And large cap, obviously, to provide stability and liquidity and the kind of redemptions if someday some redemption pressure were to arise. But even on the liquidity days, right, the fund is extremely well poised for that kind of size. 23 days, I think it's fantastic. So I think it's a great fund.
So it's a thumbs up from both our guests. I'll quickly squeeze in a question that's coming in from Pritika. Pritika is on the phone with us. Pritika, hi. Tell us, how can we help you?
Hi, I'm Pritika. I am a media professional based in Delhi. Last couple of years, I'm investing in small caps and mid cap funds like Nippon and Edelweiss, and it has given me a very high return. Keeping the present situation in mind, should I take out the money and invest in large cap, or should I remain invested?
Okay, Pritika, thanks very much. Now, I'm just tossing this to both our guests. You'll have to do this with your financial advisor independently. But, let me ask, Mohit, the Nippon fund and the Edelweiss fund, any thoughts on these two?
Look, I think Nippon, I'm assuming we're talking of the Nippon small cap and the Edelweiss mid cap, or vice versa?
The Edelweiss small cap and the Nippon mid cap.
Edelweiss small cap and the Nippon mid cap. So Nippon mid cap is the erstwhile Nippon, the Reliance growth fund, right? Again, almost 2-3 decades of performance. It's been again a fantastic fund from that perspective. From the liquidity ratio perspectives, I don't think so. Both of the funds have any causes of concern out there. Right, even in terms of the market cap breakup, if you were to see, Nippon perhaps has a little, the Edelweiss small cap has a little lesser on the small cap side, but again, I don't see that as a major reason or cause of concern on any of the fronts. So from my side, both the funds have done reasonably well. Performance-wise, they are good. On all the other parameters also, they are good. But I think the larger part of a question is whether she wants to shift from mid and small cap right now and move into some other segment or large caps. Right? To my sense, that is a very individual specific thing. Depends completely on the individual's asset allocation and risk profile. Sure. If you have overshot because of the market rally on the mid and small cap segments, then by all means, yes, cut down, trim down your exposures and move to large caps, be a little safer, right? But if you're well within your asset allocation framework and if you're well within the mid and small cap stipulated for your portfolio, then sure, I think one should continue and hold these schemes.
Fair enough, fair enough. Now, Feroze, as we're coming to last thoughts, of course, people will do their own homework, but is there an overarching call that you'd want to put out on any one or few funds, mid caps or small caps, where action is warranted because of this additional information that we have now, thanks to the stress results?
See, I think if you look at in the small cap space, we in our model portfolio exited one of the schemes, which is Birla Small Cap. And we've done enough data analytics to come to that conclusion because we don't take model portfolio calls without doing enough data analytics. That's point one. So that's one exit. If you have it, I'm sure you can switch to other small cap funds. There are two small cap funds you can continue to buy: Invesco India Small Cap Fund and HDFC Small Cap Fund. I don't think the small cap rally is over as yet. Of course, Nifty plus 3% kind of alphas are possible from here on for a year. I think that should not be missed out. So as long as you have 20% or lower in small cap on an overall portfolio, you're good. If your mid cap is not more than 20-25% on your overall portfolio, that's great. Unlike investors who buy 4 small cap funds and 80% of it in small cap is what's the worry. So Invesco and HDFC a buy, Birla Small Cap a sell is the sharp recommendation I would like to lay out.
Okay, Mohit, very quickly, 10 seconds left. Any specific fund action that you'd recommend?
Look, for
buy or sell?
For me, this is more an elimination criteria, and I will lay out that. First reason for eliminating a fund will be high turnover ratio. I'll quickly eliminate all those having a high turnover over 1, which is 100% of the portfolio in a year. Then I will try and eliminate funds which are running extremely high PE ratio because I think valuations have any which way soared up. So there's no point for me continuing there. And to me, on the small cap segment, after putting all the filters, I still like DSP and Tata small cap funds, right? Because they are running a pure true to label strategy, and which is what I like in that segment.
Okay, so if you have the risk appetite, then you can can be with, true to label small cap and mid cap funds. Gentlemen, we're completely out of time, but thank you very much for joining in and answering all of these viewer questions. I'm sure we'll keep getting more and we'll call you right back for it. But for now, it's a quick wrap on this week's episode of Let's Talk Money. We hope to see you again with more questions and queries next week.
Let's Talk Money